we got traders currently pricing in a 65% chance of a 50 basis point cut this week versus that 25 basis point reduction. Now, there's a case to be made for both, and our next guests hold opposing views on the likely outcome this week. Here for our panel on the great rate debate of 25 or 50, we're going to bring in Claudia Sahm, chief economist at New Century Advisors, and former Federal Reserve economist as well, Matthew Luzzetti, Deutsche Bank's chief U.S. economist. Thank you both so much for being here and joining us for this conversation ahead of the Fed's most important meeting of all time, of course. Claudia, I want to start with you because I know that you are thinking that 50 could be the best way to go for the Fed. Make your case for me.
Right. So there are multiple paths to 50. I think the most straightforward is first the inflation data. We have made massive improvement with the federal funds rate still very elevated. It's time to cut. That's your 25 basis points just on the progress with inflation. It's what the Fed asked for. They got it. They can cut 25. What happened since the July FOMC meeting is we've gotten a lot of disconcerting information about the labor market. You don't even need to go to the we're in a recession is imminent. Just things have cooled off considerably more. And to recalibrate, respond to the data, to add another 25 basis points and really affirm the Fed is committed in actions, not just words, in actions to both sides of its mandate. I think that's the way to start off this easing cycle.
But Claudia, what about the fact of risk here that a larger cut, what exactly that could signal about the economy, what it could then signal to the market, the potential backlash of that? Are you at all worried about that?
The actions matter more right now. Getting the interest rate, getting the amount of restriction on the U.S. economy right, that is the first order problem. And then you have the issue of communicating it. That is not a hard sell. I think it's important how it's communicated. And I expect, and I think, everything in the setup you've talked about, Wednesday afternoon is going to be a little bit of a bumpy ride, right? There is a lot of uncertainty, but it's not like the Fed has created drama just to create drama. This is legitimately a difficult decision to make, and they've got to stick to the economics of it and not get into the psychology. That piece will work out if they make the right decision about the rates.
So, Matt, I believe you're in the 25 camp. So talk to us about just your response to Claudia and why you think the more appropriate move or maybe the more likely move is going to be 25.
Yeah, I think I would frame it as the more likely move at the moment rather than the more appropriate move. I would agree kind of with what Claudia laid out, which is that the Fed is clearly restrictive at the moment. They should be cutting rates. They're very clearly going to be doing so. And there is a compelling case to do that by 50 basis points. I think coming into the blackout period when we heard from Fed officials, it did not seem like there was consensus around moving by the larger increment. We've gotten signals from news reports recently that do indicate that it could be a more likely outcome. I would say that I think the Fed would be reluctant to surprise the market, given how much it has moved in a dovish direction over the past week. And so you could very well get that 50 basis point outcome. In terms of the communications, I do think it is a consideration for the Fed, but I think it's manageable. I think that there's communication challenges on both sides. If they go by 25 basis points, you have a market that would be concerned about a policy mistake, a policy risks, soft landing being put in jeopardy. So I think they have communication challenges on both sides.
Matthew, I'm curious, when you think about Powell's stance here, do you have a sense that Powell wants to do 50 and his concern is just kind of getting everybody else on board for that? Or do you think that he is staying in line with the rest of the crowd and thinking, okay, let's do 25 like we prepped the market for?
I think Fed communications over the past several weeks or months do indicate that Powell has leaned more dovish than the rest of his committee. The Jackson Hole speech was both about kind of mission accomplished on the inflation front and that they are shifting the focus away from inflation towards the labor market, and that they are not desiring or looking for any additional weakness in the labor market, and they're willing to act to prevent any additional weakness. What we've heard from other officials, we heard from both John Williams and Governor Waller after that jobs report. And both of them didn't sound as worried about the labor market. They were focused on the fact that the loosening has been driven by the supply side of the economy, that the unemployment rate remains low. And so it does seem like you have a committee at the moment where Powell probably leans a little bit more dovish, would probably prefer an outcome of a 50 basis point rate cut. And it's a question about whether or not he could get enough of the committee in line with that.